Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are bringing to you a new company, a company which is bringing out its IPO very soon, going to get listed on bourses. High quality company, high quality return metrics, and this is going to be a very interesting corporate conversation. Let me welcome the management of Gandhar Oil Refinery India Limited, Mr. Ashlesh Parekh, the joint MD of the company, and Mr. Indrajit Bhattacharya, the Chief Financial Officer of the company. Gentlemen, welcome to the show.
Good morning. Well, thanks.
Ashlesh, help us understand the business model. On the face of it, it looks like uh, it's almost a peer of Apar Industries. It makes transformer oils and many things related to, again, there is also a base oil linkage, automotive oil, and the list goes on. So help us understand what do you make and also basically how the company makes money. And is it all, because I was looking at the manufacturing facilities, it's also in Sharjah, it's also in India, so help us understand the journey and also what you make.
Sure. Thanks, and firstly, wishing you all a very happy New Year. To begin with, Gandhar Oil, we are the largest manufacturers of white oil in India and one of the top five players globally. We have leading Indian and multinational customers as our valued customers. The revenue of Gandhar is divided into three broad categories: the personal care, healthcare, performance oil segment, which is the PHPO. Then we have, which contributes around 55% of the revenues of the company. Then we have the lubricants, that is the industrial lubricants and the automotive lubricants, contributing to around 25% of the revenues of the company. Then we have the transformer oil, that is the PIO segment, which is the process and the insulating oil, which is contributing to only 9% of the revenues of the company. The balance is among the is distribution to the channel partners, so which contributes to total 100% of the revenue of the company. Having said that, we have long-standing relationship with this leading Indian and multinational FMCG companies. We have marquee customers like Unilever, Procter and Gamble, Dabur, Imami, Bajaj as our valued customers. Our overseas sale is to 100 plus countries, and around 40% of the total revenue generated is from overseas sale. So we export
That's
to
impressive.
US,
That's
we export
impressive.
to thanks. So we export to US, Europe, South America, Africa, Australia, PNC. So we've virtually covered the globe. Uh, we have transitioned our company from buying the key raw material base oil from distributors earlier to refineries today. So today we have term contracts with leading refineries out of Gulf countries, out of South Korea, for uninterrupted supplies of our raw materials, having assured supplies and also timely deliveries for our raw materials.
Hmm.
And today the price the base oil buying is primarily on index linked pricing, which was a spot pricing earlier. So which has helped the company in increasing the matrix, as you were discussing, in terms of improving the profitability, improving the matrix of the company. We have three strategically located manufacturing facilities: two in India, one in Dubai. Dubai plant is fairly new plant. It's in Sharjah, which was the production out of UAE plant started in 2019, and Indian facilities are located in Taloja and Silvassa. Taloja plant is primarily for the personal care, healthcare, performance oil division, wherein the products manufactured are not only sold to local customers but also exported worldwide.
Hmm.
Uh, we are in this fastest growing category, which is white oil, which is expected to grow at 10% CAGR in next 5 years, from FY23 to FY27. Apart from that, if you see, we have a massive scale of operations. Our revenue in FY23 was 4,080 crores, and our profit after tax was 230 not crores in FY23. We have leading ROE and ROCE ratio of 32% and 41% in FY23.
Right. You covered a lot. Now I want to go back to the products which you just named, and all these are very highly regularly used products. Whether you're talking about automotive oils, all the sectors you named are actually of regular usage. Um, Help us understand what is the key raw material for you, and what are your top sort of suppliers for those.
Sure. So, see, white oil as a product is used in various industries. Now, we have FMCG, we have pharmaceuticals, we have plastic, as the application of white oil. Wherein, in our PHPO division, that is a personal care healthcare division, we have customers like Unilever, Procter and Gamble, which uses, the white oil or a petroleum jelly for manufacturing key brands. It's a consumer oriented brands like Vaseline or Vicks Vapor Rub, where our products are primarily being used as a key raw materials.
Sure.
So this is where the application of our product specifically is. And coming back to the raw material, the key raw material which is used are base oils, additives, and few of waxes. Now base oil are primarily sourced from countries out of Saudi Arabia, out of GCC, out of South Korea.
Would it be right to think that perhaps you'd be buying from Saudi Aramco, Sharjah Petroleum, ADNOC? Like, who would be your like those
See, these
top
are our key,
suppliers?
yeah, these are our key suppliers where we have term contracts with these refineries today. In terms
Hmm.
of Saudi Aramco, in terms of GS Caltex, in terms of SK Lubricants, for example. So these are our key suppliers for key raw material, which is the base oil.
Right. And these would be largely long-term in nature or 12-month contracts and are being renewed periodically.
So these are fixed volume contract which
Okay.
lasts for 12 months, and but the pricing is variable. Now this is a very important point.
Index linked.
Yeah. So if you see, base oil is a derivative which is coming out of distillation of a crude oil. So
Yes.
which is subject to fluctuation, which is subject to volatility. But
Mhm.
the buying that we do with our valued suppliers, it's a contract based buying wherein the raw material pricing are linked with ICIS base oil index. Now
I
ICIS
understand.
publishes
But
four
then, but
reports in
then
a month.
Sure. Then does that imply that when you're supplying to HUL, which is after value addition processing, and you're supplying a product to HUL or any other company in India, are you also able to pass on the price increase if it happens?
Yes, with few of our customers, we do have 12-month contract, wherein the pricing, the raw material pricing is part of the ICIS based on index, similar mirror to our supply contracts. Then we have our variable overheads, we have our fixed overheads, then we have our gross margins, which are pretty much fixed, and we are able to pass on the increment or decrement of the base oil pricing to our customers. Having
Very
said
nice.
having said that, we have more than 3,500 customers, and around 70% of our business is coming from repeat orders.
Right, very nice. Because then it implies you have a stickier customer base. You're able to actually get the index linkage, so price volatility is less. And then mostly you're able to supply your price fluctuations. So that actually gives you a sort of stability, and that's why the return metrics look slightly better. Having said that, what is sort of capacity utilization you're working right now? Let me now come to Indrajit ji now. Indrajit ji, what's the sort of capacity utilization the company is working at present?
So the company's total capacity, installed capacity as on date is 5,22,000 KL, out of which 1,43,000 each is at Silvassa and Taloja, which is 95% capacity utilized. The Sharjah
Okay.
plant, which has a capacity of 2,35,000 KL, is being fairly new, has a capacity utilization of about 65 to 68% right now.
Very nice. The Sharjah capacity is also catering to India, or you're also using it for exports?
No, Sharjah capacity is for locals and overseas supplies from there.
Very nice. And for the Sharjah business also is actually coming straight into the holding company, or there is a separate free zone company there?
No, no, no. There is a company which is the Sharjah company is called Texol Lubritech FZC, which is line by line amalgamated into the holding company.
Understood. Yes. So, okay. Now, having said this, sir, because when I hear 95% utilization, automatically it comes to a mind that perhaps company either would be already pursuing or would be planning capacity expansion. So, help us understand two aspects here. Are there any capacity expansion plans? Number two, what is the amount of funds you are raising with this IPO? And what will be the fund usage, the planned fund usage for that? And Rajiji, over to you.
So the primary size is 300 crores, 302 crores to be precise, out of which 22 crores is going for the repayment of the term loan at the Sharjah plant level.
Mhm.
Uh, there is a 27 crores capex at our Silvassa plant. There's
Mhm.
185 crores of working capital and 65 crores of GCP. Uh, we are also doing a capacity enhancement at our Taloja plant of 1 lakh KL, which is out of which 25,000 has already come on stream. And this is entirely for the personal care and healthcare part of it. And this 1 lakh KL should come upstream by the end of this financial year. This is from our internal accruals.
1 lakh KL is being expanded, out of which 25,000 is already commissioned. Is that what you said
Right,
Yes,
right.
for
absolutely.
Taluja?
Yes.
Okay.
Yes. And just to
When the
add,
25, sure,
just to
please,
add,
please
we
say.
are also doing capacity expansion at our Silvassa facility by around 18,000 KL. So the total
Okay.
capacity expansion will be 1 lakh 18,000 KL approximately.
And so just revisiting the fact, what was the total capacity you highlighted?
5,22,000 for all the three plants taken together.
Which implies we're almost talking about capacity expansion between 20 and 25%, if I
Yeah,
talk about total
yeah,
expansion.
yeah, yeah.
Right, sir. And also, in the GG, what's the sort of operating leverage, or I should say, not operating leverage, what is the asset turnover usually company operates at? If we are expanding by this much, what is the incremental revenue actually we can expect out of it, since it must be a brownfield expansion?
So going at, I mean, futuristic, but present this
No, no,
thing.
no. Let's clarify. You're not doing any financial forecasting here. By the historical asset turnover, what's the usual asset turnover we work on?
See, we anticipate, for utilizing the enhancement of capacity that we are doing in both our facilities, within next 3 to 4 years. So, if you see today, we are using our capacity, in a very optimum manner. We are working on two-shift basis. Only in some seasons we operate, only in some months we operate on three-shift basis. But the idea is, to grow in the PHPO division, which is a personal care healthcare, where the capacity utilization is almost up to the brim. So, with the increasing capacity, we want to, focus our growth strategy with our existing customers. We want to grow with our new customers also, and we also want to, formulate new products for our customers, to envisage and plan the future growth of Gandhar.
But what has been the historical asset turnover for the company?
So
So
the
1 lakh KL will generate 80,000 rupees per KL at current selling price.
Okay.
and to be precise, and the asset owners are early 20s.
Sorry.
In terms of, if you are asking me a factual question, it is early 20s.
Okay. So that should be something good, a moving point here. Apart from that, what's the sort of net debt in the GG the company is sitting at right now?
So just a minute. Net debt. So currently the net debt is 276 crores.
Okay. And with this, actually, we are going to repay around 32 crores of term
Term
loans.
loan,
And
term loans.
right. And with your very strong, healthy margins, I would believe actually cash flows are will keep on increasing over the next 2 3 years as the capacities keep on expanding.
Sure.
So that perhaps should not be an
Yeah.
issue.
Yeah.
Uh, where we are right now, Ashlesh, coming back to you, what is the company aspiring now? Is it keep on expanding the same segments, or you're looking to expand segment wise also, or category wise also?
See, as I told you, the focus at Gandhar is, to focus on the personal care healthcare division. We want to, grow in the PHPO segment. Why? Because, there is a growth demographics in terms of, if you see the industry report as well, the white oil is expected to grow at a 10% CAGR in next 5 years. We want to capture that growth. Apart from that, we want to grow with the customers because there are high entry barriers in the business. Now, if you
Mm.
see getting empaneled with, murky names like Unilever or Procter and Gamble, it's a time-taking process. The typical empanelment time with these specific customers are nothing less than 4 years or 5 years, of hard work, first persuasion required, to get onboarded. Why? Because these customers are very choosy in adding new suppliers. I mean, if you see brands like Vaseline, brands like Vicks, Vapor Up, these are all household brands, and multi-billion-dollar brands, and which is available globally. So they are very skeptical, very choosy in adding new suppliers. They want to ensure, the supplier that they are going to add, are able to live up to the expectation, give supplies on time, give deliveries on time, and give qualities on time. So quality is a very important criteria, when it comes to deliveries to all these specific customers.
Right, and you basically have done it over the last many quarters, so perhaps that should be something interesting. Um, on geographies, how's the sort of you already said that 100 plus countries are exporting to, but in terms of geographies outside India, which are those top geographies like Europe or Americas or Africa? Which are those top geographies where the revenue is coming the most?
See, Gandhar, we at Gandhar, are focusing overseas sale as our important core sector of growth. Having said that, we are exporting to 100 plus countries, including the Europe, US, South America, Africa, Australia, and so on. But if you see Asia Pacific contributes around 70% of our total revenues export overseas sales generated. We are also exporting to around 14 to 15% to the Americas, and balance is across the Europe and African countries.
ठीक है sir. Now let's come back towards my last few questions. One of the question for our viewers, for anybody who's trying to understand the company, is that what makes Gandhar such a unique company from the perspective your return on equity, return on capital employed, return on net worth is simply saying that you have a moat. Moat implies that you're able to command margins, you're able to command sort of returns here. So, what really is giving that competitive edge to Gandhar? Help us understand that.
Sir, absolutely yes. I mean, we have the industry-leading ROE and ROCE ratio of 32% and 41% respectively as of FY23. We have, a consistent track record of financial performance over past many years. Apart from that, the focus at Gandhar is specifically been on the PHPO, which is a personal care healthcare segment, where we want to grow further. We want to expand our footprints globally. We want to grow with our customers. We want to also, enroll new customers. As I informed you, we have more than 3,500 customers. 68% of our business is coming from repeat orders, and the other mode is the strategic tie-up we have with our customers. So we have marquee names, as I informed you, like Unilever and Procter and Gamble, which is helping the company grow to the newer levels.
I've also seen other companies in your sector where they have also commanded very good return ratios. Is it primarily the high entry barriers in the sector which gives companies like you a sort of good command, good returns, long-lasting sort of planning? Is there something like that? Is the high entry barrier is the one which is really giving a sort of a good advantage?
Sir, yes, I absolutely would like to agree. It is a high entry barrier business with the customers, with the names that I've just discussed, with the pharmaceutical customers we have. Apart from that, if you see, it is kind of an oligopolistic market. It's like big gets bigger, because at one side, we want to ensure the right tie-up with our suppliers for key raw materials. At the same time, we have strategic tie-up with our customers also, to ensure there is a price pass-through mechanism with our few of our customers. So there is very limited scope of any risk.
And also, Ashleji, I think since you're buying directly from the refineries, your raw materials, that perhaps would be giving you sort of a good command over in terms of low cost advantage also. Would that be a right assumption?
Exactly.
Yes, absolutely. Yes, I mean with the quality of supplies that we have, with the contracts that we have with these refineries today, it has helped the companies. It has helped Gandhar specifically in increasing the bottom line. Ensuring stable supply to our customers also.
And in the GG, like for the raw materials, is like more than 75% is directly sourced from factories or refineries. Would that be a right
so
assumption?
we buy from four major refineries in South Korea, Middle East, and Taiwan. More than about 80% is sourced from there, raw material.
Okay. That actually explains everything. Why such a strong return metrics are being commanded. Perhaps it's a very exciting space, exciting sector, and our viewers would actually recall there have been some companies in the last 2 years who have really gone ahead and create a lot of wealth for the shareholders. You are now actually going to get listed, and I think I'm extremely sure our viewers, all the investors who are going to apply in the IPO, they're, I think, going to look with great interest. I think a sector perhaps which is really creating a lot of wealth. From our side, from our viewers, all the best wishes to you for your IPO. We look forward to stay in touch and again talk to you once the sort of next set of results come. But all the best wishes to you, and thank you for coming on the show.
Thanks,
Thank
and
you.
really appreciate your time. Thank you so much.
And dear viewers, with that, we come to the end of the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.